we're going to talk about actually like cryptocurrency and the blockchain. So I'll get started actually with the simple definition actually what is blockchain, and then I'll probably start with probably what or probably with a simple scenario with the global payments actually like how a blockchain can help us to transform the way we do business today, or the transform the way we probably do enterprises operate today. Okay, so what is blockchain actually? As we have been hearing, it's the buzzword, and it's like everybody probably like talk of the town, especially the ones who are dealing with actually cryptocurrencies or trading with it. Actually, like, so I think most of us actually associate blockchain with the cryptocurrencies, and certainly like the Bitcoin is the one actually which introduced the blockchain concepts or the underlying technology actually on which actually Bitcoin was built. Okay, but actually predominantly people associate blockchain actually with Bitcoin, which is wrong. Bitcoin is just a digital currency, or probably is the pseudo currency, or we call it actually virtual currency. What Bitcoin is. Here we're not going to focus just on Bitcoin. We're going to focus on the various aspects of blockchain, how blockchain helps in driving actually the cryptocurrencies, how blockchain helps in driving the enterprises. Welcome to the next generation of internet, actually, as we call it, actually, what blockchain is going to influence, and probably how the blockchain is going to change or transform the way we are on like as we probably like do business, or as probably enterprises perform business today. Okay, so this is actually what I'm going to talk through, and probably I'll explain the concepts first before we probably understand what blockchain is. So assuming this is party A, okay, and this is the sender, okay, who wants to send money actually to party B, okay, who is the beneficiary, okay. So in this case, actually, what we are trying to do is, let's say this third party is nothing but actually, let's say Swift, okay, through which actually we're making the payment on, okay, or want to make the payment actually, So this guy is in one geography, and this guy is actually party B is in another geography, okay. So what we do today actually typically in a global payment scenario, let's say this guy, party A, which is like sender, who's sending actually $10 over the network using the third party trusted. It certainly is a trusted party. Could be Swift, could be any wire transfer which you're using to make this transfer through the third party over the network, and the beneficiary would receive, let's say, $9.8 actually, after transfer is done, or the once the money reaches to beneficiary. What is happening here is like this third party actually who's making the transfer, he's doing actually the KYC check at both the ends. Okay, he's doing a KYC check actually both the ends. He's doing actually AML check actually, he's doing AML check. He's doing actually probably he's doing the forex translation actually probably from one currency to other currency to really make from fiat to probably cryptocurrency, or could be the fiat to make this transfer happen today actually on the network. And again back to the fiat currency on which actually to the beneficiary to which actually the money would be received. Okay, so if it's a dollar to dollar, fine. Otherwise actually so what he's going to do is he's going to do a KYC check whether this sender actually who's sending the money actually from one bank to the other bank. So he'll ensure probably like he has a valid account. He has an authenticated actually account ID with a valid bank, and do a AML check whether money is fair. It's not anti-money laundering, and plus actually like he might do a forex transfer and all, forex conversion and all before he sends the money from A to B. B is the beneficiary, and he'll do the similar check actually KYC check actually for party B. He'll do a probably AML check actually for this guy also, and probably at the center side he might do actually validations actually for whether he has a valid bank ID, and whether the bank actually what he's authorized probably is the bank where he's opening the account is an authorized bank or not. Okay, once these validations are done, typically the money gets moved actually between party A to party B. This money transaction actually takes typically 2 to 5 days actually in a real world scenario. This is what actually Swift takes today actually to really make that money transfer happen. So this 2 to 5 days, what the money transfer happens today on the real world scenario. Okay, and there is a probably transaction money which is charged, or administration charge which is charged actually to make this transfer happen. Okay, apart from it, actually once the party A actually probably will have his own bank account. In his bank account, he'll probably have a view probably how much money is being debited actually from his account, and how much money is credited actually to the account of the party B. Will have that view. Okay, so what we are trying to say is probably both these parties have one view, or probably in terms of the transaction which is happening. I mean, it's not one view of the transaction which is happening, which means like he'll have actually the probably that $10 has been debited, where he'll have a view of $9.8 has been credited. Okay, but he'll never come to know whether $9.8 what reaches to party B. He'll never have that view. Okay, so what blockchain talks about? Blockchain says we don't need a third party to make the transfer happen. We don't need intermediate parties. Okay, what blockchain says? It says actually, you don't have to pay the administration charges to make the transfer happen. So which means if you're trying to make the payment of $10, that party B should also receive the $10 at probably at the other end. That's first thing. Second thing, what the blockchain talks about, today it takes 2 to 5 days actually to make the transfer happen. Okay, between the two parties. Typically, this transfer can happen actually, if we are talking about Bitcoin network, could be like 10 minutes around what it takes. A Bitcoin network would take. If it's Ethereum, could be 15 odd seconds. If it's like Ripple, it might take up to 4 seconds to make this transfer happen. So that's the kind of speed what we're talking about. So what we call it a near real time transfers, okay, or near real time settlements, which blockchain talks about. Or instead of 2 to 5 days, what has been taken on the network. Third thing, what blockchain talks about, the validations which is done manually today, like AML check, KYC check by the third party, it can be automated. Okay, these validations can be automated using any of the programming languages. Okay, if it's depending on the platform what you're using actually for writing your smart contracts, we call them as smart contracts. Basically you are automating the validations using these smart contracts. So there's a concept of smart contract which has been introduced first in the Ethereum, and now it's been like many platforms which are supporting the smart contract concept. Bitcoin didn't have the smart contract concept. Okay, so what we are doing is probably these validations like KYC, AML would be done actually real time on the network. Once these conditions are met, automatically the transfer would happen actually between party A to party B over the network flawlessly in a near real time. And as I said, in Ethereum, it will take 15 seconds. If it's like Ripple, it will take actually like around 4 seconds, and the money would be settled. Okay, and what blockchain says, today we have just a debit entry actually at the a sender with the party A or probably the sender end, and beneficiary has actually probably the debit entry. Okay, but there is no way actually where party A or party B or the would have the complete view of in terms of what party A has transferred to party B, or once the money received by party B, party A would come to know that money has been received by party A. Okay, sorry, by party B. Party A will never come to know that party B has received the money. That acknowledgement is not happening today on the network. Except that actually you'll be able to see that money has been debited. So what the blockchain says, bringing in actually we have something called as shared ledger technology over a network. So basically now what we are saying is we'll have both the entries actually on the network or on the ledger. Okay, or probably for all the transactions which are happening on the network. So basically we'll have now a debit entry and then a credit entry once the money is received by the party B. Same here, we'll have probably a debit entry, what the party A has sent the money, and then we'll have a credit entry to the party B, actually what the amount has been received by party B. Okay, so that is what actually blockchain brings in. Blockchain brings in more transparency, trust over any transaction which is happening on the network. Transaction happens in near real time. Secondly, I'm like the charges what you pay or the administration charges or the intermediate parties, we don't need the intermediate parties actually on the network to make the transaction happen. That is the whole concept of what blockchain talks about. Okay, so with that intent, I'll probably go back to the our slides actually. So what we had said actually, what is blockchain for? We say blockchain is record the state and ownership of an asset. To make probably what is an asset? An asset is actually anything, any commodity which has a value, which you can transact over a network, is called an asset. Asset could be a tangible or an intangible asset. Okay, what is tangible? What is intangible? Probably we'll see in the future slide. And it enables parties that do not each other or trust each other to transact efficiently and faithfully. Okay, automate contractual agreements between parties in a network. So if we looked at my example, we talked about AML, KYC check. Those validations which were happening before by the third party, we are actually automating those contractual agreements, those validations which are happening between two parties to make the transaction happen. So why we need blockchain for? What is this blockchain for? This is what the blockchain is for: to record the state and ownership of an asset, enable parties that do not know each other or trust each other to transact efficiently and faithfully, automate contractual agreements between parties in a network. Okay, components of a blockchain. What is ledger? Ledger is nothing but actually bookkeeping, record keeping. It basically maintains the all the records or all the transactions which are happening on a network, business network. Okay, so that is what actually is used. Ledger is used for actually to maintaining actually all sorts of entries is for record keeping or bookkeeping for all the business houses, or by the small traders, or by actually any industry who deals with commodities to transact. Okay, what is an asset? As I said, actually asset is nothing but a commodity which is shared or which is transacted over a network. Anything which has a value is an asset. Okay, business network. In a business network, actually we have basically different participants which are like-minded who want to transact over a network. Okay, which forms a business network. Okay, what is consensus? Consensus is nothing but basically the value. So see, the example which I talked about, the global payments. Okay, in that example we had only two participants. Assuming you have a network where you have multiple participants. Okay, what blockchain recommends actually, since we are getting rid of the intermediate parties or intermediary. Okay, we need to have a consensus or something which probably today a federal government or federal agency does it. Okay, which we can trust actually blindly, because they have established credibility in the market. To reach to that level, actually we have actually introduced the concept of consensus. Okay, in the blockchain network. So consensus could be achieved actually in terms of proof of work, proof of stake, Byzantine fault tolerance. So there are various other consensus algorithms. How these work actually, basically we can define the how the consensus can be achieved on a network. So let's say Bitcoin says like 2/3 of the miners actually has to reach to a consensus before a transaction gets written to a block, and once it's written into a block and agreed upon by all the miners actually on the network, the consensus is achieved. The blocks gets validated and committed to the ledger. Okay, so so consensus is the key to really get rid of the intermediary or intermediate parties or the trusted federated parties actually who helps us in making these transactions over the network. Okay, what is provenance? Provenance is nothing but actually the audit trail of the transactions which are happening. Let's say if I talk about the party A and party B, the transaction actually you will see the same view of entries between the two parties. So today, like if I bring in any auditor or regulator who wants to see all the transactions which are happening on the network, they'll have a common view whether they will review the ledger of party A or a party B. Okay, in the example what I showed you. Okay, so basically provenance means like audit trail or audit history, which will be maintained common across any business network or any business entity or a participant on a network. Okay, so there'll be a common set of transactions which will be visible to both the participants or all the participants on the network. Okay, immutability. Immutability means once a transaction is triggered over a network, okay, it remains temper proof, which means when a transaction is triggered between, let's say, between a sender and a beneficiary in the example what I showed you, the global payments, transaction cannot be overwritten, okay, or it cannot be updated. Only way it can be updated or it can be overwritten is, let's say if I transfer directly $10 from party A to party B, if he returns the money back to the party A, $10, in a goodwill or in good faith, saying that okay, like this money doesn't belong to me, that's the only way you can overwrite. But in that case also, both the transaction entries would be recorded in the ledger. Okay, and hence we call it actually any entries to the ledger or any transaction which are happening over the network are immutable. Okay, finality. So basically the consensus, provenance, immutability helps in reaching the final state of a transaction, which means once a transaction is triggered, it remains final. Okay, you cannot alter it. And if we have a larger network, we have multiple commodities, or there is a journey to a transaction. Okay, we'll talk about what is the journey or transaction life cycle. So basically there is a final state for every transaction, and that can be achieved through consensus, provenance, and immutability. We'll talk more actually so that you better understand it what I'm trying to say by finality. So a device for recording the ownership and state of an asset. Okay, as I said, actually ledger is nothing but a bookkeeping or record keeping, what you probably do or transact over a network. Okay, or you record the state of an asset. Okay, what because it changes, the ownership of an asset changes when when you transact an asset between two parties. Okay, like debit and credit, what we talked about. So this is a traditional ledger actually what we have on the left hand side. This is how probably a different probably entities, probably a general ledger for a sales ledger control account, then for a sales tax, for a sales account, ABC Limited, DEF Limited. These all entities have their own independent ledgers which have been maintained today traditionally on the network. If you see, these ledgers doesn't have any correlation actually between, if assuming there are 5 participants on a network, there's just no correlation. Okay, no way you can make out a clear where the asset is exchanging hands. Once is out of probably one's purview. Okay, where actually what we are talking here in blockchain, any transaction which is taking place. So if I say block 0, okay, so any transactions, I mean all the transactions which has happened in a stipulated time are recorded, and all the parties actually on a blockchain will have a common view of all the transactions which is happening between these different participants on the traditional ledger. Okay, which is happening between the different participants on the network. Traditional ledger would look like this, where actually a blockchain ledger would look like this. All the transaction which is happening bumped into a block, and this block gets committed, validated, and committed actually into all the different participants' ledger on the network. Okay, and they'll all have a common view of probably all the transaction which is happening. And why we call it as a blockchain? Because these blocks are interlinked, okay, in such a way that it forms like a linked list, where actually the previous address of the block is stored in the current block. So this, let's say if the block 2 or t plus 2 is the current block, this block would have the previous block hash address. This block will have the previous hash block address. This forms like linked chain, okay, or linked list, and hence the blockchain. I mean, it's basically a series of chain of blocks. Hence the name blockchain has arrived. Okay. So what is an asset? Anything that is capable of being owned or controlled to produce value is an asset. As I said, actually two fundamental types of assets what we have. One is tangible, like a house is a tangible asset. Okay. Intangible ones is a mortgage. Intangible assets subdivide actually could be in financial bonds, intellectual patents, okay, or IP is what we call it. Digital could be music and all. Okay. Cash is also an asset and has property of anonymity. Okay. I'll move on. So what is a business network? Okay. A business network is nothing but a collection of people and institutions responsible for ownership and a state of one or more assets. Okay. Distributed ledgers in a business network synchronized by consensus algorithm. Is that okay? So what is like how the asset state changes? Okay. So let's say like if you are changing if the asset is exchanging hands between different parties on a business network, certainly the state of the asset is changing, and so because the ownership of the asset is changing. Is that okay? So basically, like asset which was belonging to party A, once the asset exchanges hands between party A to party B, now the asset ownership lies with the party B. Similarly, if it reaches to party C, the asset ownership lies with the party C, and likewise to D. Okay. So what is consensus? So consensus is nothing but attributes that make blockchain a trusted system for managing transactions between parties that do not know each other or even trust each other. Okay. So consensus like all parties in a business network agree on the kind of information to be captured about an asset. Okay, so just keep this in mind. Actually, I'll probably talk about it. Actually, like what is the transaction life cycle and how you define these. The what kind of information an asset can have between two participants, and probably like how a asset journey can be. Sorry, how an asset journey can be defined. Okay, so I'll probably talk about it so that you can relate it better. Provenance parties are able to trace records. As I said, actually auditability, you have actually audit trail of all the transactions which are happening on a network. irrespective of probably like any node actually on the network. So let's say there are hundreds of nodes actually or hundreds of participants on the network. You will have a common view of all the transactions on any node actually on the network. Okay, right from the source or to the root actually like where the transaction has started. Okay, immutability, records in a ledger cannot be altered or removed, which means like temper proof. Once the transaction is committed, stays committed. Only way a transaction can be modified is basically like the party who is the owner, he has to probably like send another transaction to reverse the transaction probably to the original state actually where it belonged to. Okay, finality, when a transaction is committed, there is no rolling back. I mean, what is the traditional like how blockchain will fundamentally change business processes? What is this traditional process actually of traditional business? We have a clearing house, an intermediate party who helps actually like different parties operate and probably share their probably exchange assets using this clearing house. Okay, today that's how we typically like probably operate actually in a typical business house or probably typical scenario. Any business scenario if you talk about. Okay, so we have intermediate parties, third parties who are helping with the actually like changing the exchange of the assets in a given world in a given scenario today. Okay, certainly this is not efficient, is very inefficient the way you deal with it, because you're dependent on actually third party to make that happen. Expensive because there's administrative charges or what the intermediate parties are charging, and vulnerable because certainly it's vulnerable because of security or theft. Plus you have actually like it's like a centralized database. Okay, and this database is hacked, all the information actually probably what this guy is owning probably would be would be with the hacker actually who has hacked this system. Okay, because the client server architecture. Whereas like in a blockchain we have a distributed systems where each of these parties will have their own databases, and in that case what will happen is like once they have their own databases, even though actually you hack actually one of the systems, probably this system can always be brought back actually with the content or the state of the other parties actually on the network to the original state actually once the system is disconnected actually from the network, and you can restate this network with the new with the current state of the transaction which is happening on the network. Okay, so that's how actually we moving again from traditional to probably like newer way of doing business using blockchain. So how we do business actually over a blockchain? So basically like we have, as I said actually, you can see that probably the different blocks over here: detailed signed encrypted transactions and a ledger. So basically you can see all these parties actually like who are there actually on the network now, they have a common view of all the transaction which is happening on the network. Okay, same blocks are committed actually to all the parties. They have their own distributed systems or distributed databases. They have a common view of the transaction which is happening on the network, and these transactions which are being committed actually on the network, they are digitally signed. Okay, so what is digitally signed? Basically every participant on the network are issued their own identity and access management actually to the network. Okay, basically like if you have heard of PKI, public key infrastructure, so a public key and private key actually which is issued to all the participants on the network. Public key is made available actually to all the participants actually who are there on the network. Okay, whereas the private key is confidential and is only for the participant actually who should be knowing it, and should be confidential only to the participant actually on the network. And these private keys are typically are stored actually onto the wallets, okay, on the network. Okay, and certainly the transactions which are happening on the network is encrypted, we call it hashed, and stored actually on the ledger in the hash form. Okay, all parties have this replicated ledger, that's what I'm trying to say. Okay, there's a single view of ledger actually which all parties have it. Okay, and hence and to reach achieve the consensus is much more easier, and basically you're not dependent on the intermediate parties. You can probably like, have a common view of all the transactions. You can achieve the consensus between all the participants on the network before you commit the transaction onto the ledger by all the participants on the network. Okay, provenance, you have a single view of truth at any node. Actually, if you really go and probably audit or regulator wants to audit, he'll get a single view of truth at all participants or at nodes, all the nodes actually on the business network. Basically, what all transactions he sees here, he'll see the same set of transactions over here, here, and here. Okay, immutability means like once the transaction is committed, stays as is. You cannot update, you cannot delete a transaction. Okay, is a temper proof. Finality means once the transaction is committed, I mean, the asset cannot change its state. Okay. So basically, like, with this actually we'll come to what is blockchain. Okay. Now we are going to introduce blockchain in a more refined way. Okay. So let's say, like, if you want to do an elevator pitch, if you are in an elevator, actually, what is blockchain? Somebody asks you. Okay. So blockchain is a trusted distributed ledger with shared business processes. Why we call it a shared business processes? For between two participants on a network. Like if I talk about the example, what we talked about, the global payments, we had a sender and a beneficiary. There are certain actually like rules which were supposed to be executed before the transaction would happen on the network. Like we talked about KYC check, AML check, okay, or probably like forex exchange before the transaction gets committed between a sender and a beneficiary. So that's what we are saying, with shared business processes, a trusted, a distributed ledger, because both the parties have same view of the ledger and there's a trust between the participants actually on the network, since there's a transparency on the transaction which is happening on the network.